Hello traders, Gary Wagner here. Just about 11:15 in Honolulu, 5:15 in New York. It is Thursday, December the 6th, 2018, and this is the Daily Report for Gold and Silver. With the exception of gold, the entire precious metals complex did trade lower under pressure today. Gold finished fractionally higher, up 60 cents at $12.4320. Silver did have a decline of about 0.25% or 4 cents on the day at $14.54. Platinum down almost a full 1.5%, breaking below $800. That is significant at $790.50. Palladium tumbled down about 2.5%, closing at $1155.90. Now, that was all within tailwinds provided by a weaker U.S. dollar. Dollar down 32 points at 96.69. And the most interesting aspect in terms of trading today was an incredible recovery by the U.S. equities markets. The Dow on its low was trading off by almost 800 points, but closed down 79 points at 24,947.67. S&P also down fractionally, but closed well off of the lows at 2694, and that was all started by a tremendous rally in the NASDAQ Composite Index, which closed higher today at 7185. Traders, interesting action in the markets today, specifically gold. We are looking at a weekly chart. We can see that on the week we have respectable gains. Market is trading near the highs. However, we are noticing that for the first time we're seeing some resistance come in right around the 50% retracement, and that of course resides at roughly 1246. It is based on a long data set which begins at the end of 2015 and takes us all the way to these multiple highs that came in at around 1370. The high today was 1249, so we have had the highest high that we have seen in quite some time, but we did close below what I believe to be a critical level that we need to break above before we can look to move to the next level, which is about 1260 on our daily charts. And traders, what we can see when we do pull up our daily charts is today's candle was a doji. Now, a doji is simply a point in time or a daily cycle in which neither the bulls nor the bears are able to dominate trading activity in the market. The fact that we had these extended highs and lows compared to the close tells me that there was quite a battle going on in the marketplace, but we absolutely are seeing some resistance come in at this price point. That was partially the reason that we took profits yesterday on one position, raised our stop on the second position, of course, and then we are still long 1 February gold. Our stop is placed just below these lows right here. These came in, this is Tuesday's low here, that came in, I believe, at 36. Our stop is at 35.13. My sense is that we might see the market trade sideways right now, form a base at these new price levels, and then begin to move higher. A Wall Street Journal article came out and talked about the fact that it seems as though the Fed is now having a much more dovish tone, and all eyes and ears are going to be on this month's FOMC meeting to see if, in fact, the Fed raises rates one more time this year. Traders, Palladium futures falling out of bed today, losing about $26 by the close, closing at $1157.90. Yesterday, we saw palladium prices hit the all-time record high at $1,200 per ounce. It actually was $1199. Just shy of that century mark. And today we saw the market tumble really significantly throughout the day, down at its low about $35. In terms of a candlestick pattern, we can see a three-river evening star being identified in this particular 3 days of action. We also talked about the fact over the last couple of days that when we did a Fibonacci extension, we had a 1-to-1 relationship at about 1187 in the market. So it seemed logical to me at that point that we could see some weakness come into palladium. We are certainly seeing that right now. Traders, my recommendation, of course, is to maintain our current long position. We have pulled profits yesterday on one. We remain with one February contract. That contract is in profits. Our stop is placed above our entry point. So worst case scenario, we get out with a small profit. Best case scenario, we see it run to about 1261. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.